Hi friends, this is Max from learnthepriceaction.com. I'd like to bring to you a strategy. It's called Magic of Tall Candles. It's basically a tall Japanese candle strategy. This trading strategy is used by Wall Street professionals across the globe. So let's get into it. Just a little bit about this strategy. The tall candle strategy is very well documented and discussed by professional traders like Steve Nyson in his book Beyond Candlesticks. And like I said earlier, it's used by the Wall Street professionals across the globe. Now, what exactly is tall candle strategy? Tall candles basically are extremely bullish or extremely bearish candles that happen in the market. And tall candles, they act as support and resistance to the market. And we will learn how to take advantage of this. Now, the first step in identifying value area, the first step in understanding what exactly tall candle strategy will do is we have to understand what is a value area. Now, the value area is an area where traders are interested in buying or selling. Okay, so the first step is that we identify the value area. So how do we do that? Like I said, the first step is that you identify a tall bullish or a bearish candle that stands out from the surrounding price action. The second step is that you mark its 50%, 61.8 or 38.2 Fibonacci levels. As a third step, you mark any close by support or resistance levels. Okay, so that after you've done 3 steps, you have basically identified what's called a value area. So these are the locations. Any intersection of these 3 locations, we will be interested in buying, and if a signal happens there. So that's our value area. The next step is that we wait for a price action signal at these areas. For example, an inside bar, hammer, doji, dark cloud, piercing pattern, etc. It's very important that you wait for a signal to happen, because if there is no signal that's happening at this area, we will not be interested in any execution of the trade. Now let's look at some examples how this everything unfolds. All right, the first pair I'm looking is a forex pair. It's a US dollar Japanese yen pair. By the way, this strategy is only applicable to the daily chart. Like I said, it's a professional strategy. So professionals, they trade only daily charts or weekly charts and very rarely for hourly charts. So I will be concentrating on daily charts only. Now, as you can see, I have marked a book like a bullish candle that happened in the market. And then what happened after that is that we marked its 50% location. And as you can see, the gap resistance is basically a 50% line of that candle. And also there is a gap that happened. As you can see, there is this gap that's happening in the market. Now that gap actually acts as a resistance in the market. Okay, so anytime market wants to come back, if the market breaches a gap, then the gap is not valid and the market will actually fall further down. But if the gap is held, as you can see there, after that there are 4 inside bars. So it's actually a price action signal that happened after the gap is formed, which acted as a support line for the tall white candle. And then exactly what happened after that is that you had this big bullish move that took the market up. Now let's look at another chart. This is for people who are interested in Bitcoin. I know there's a lot of Bitcoins going on, Ethereum, Bitcoin that's going on in the market. I'd like to bring your attention to the Bitcoin. So this strategy actually happens everywhere. It happens in the ETFs, Bitcoins, or any Forex pairs, or any kind of stocks, and you name it. Anything you want to trade, you can use this strategy. Now, going back to this tall candle that's marked here, as you can see, the market pushed higher. Okay, so but what happened after that is that we marked its two areas. One is 50% and one is your 61.8%. So that's an area we will be interested in buying. Okay, and then what happened after that is that we also would draw a support line. You know, the tall white candle, as you can see here, it breached that support line. That was the last price which from where everything fell in the market, but the tall white candle, it breached that area. Now, after that, at 50% and 61.8%, there was a hammer that formed. And then after that, the price pushed higher. It's basically a morning star formation. At the same time, it's a combination of hammer. So it's a classic signal for people to go along. And what exactly happened after that? You can very well imagine this is what happened. So let's look at the other example. I'm looking at a TD chart. It's a Toronto Dominion Bank in Canada. Anyone who is in Canada, they very well know what is this bank. It's one of the biggest bank in Canada. As you can see, there was a big bearish candle that happened here. And what happened after that was market kind of moved back up. It came down and it pushed back up. And it pushed back up where? It pushed back up to 38.2%. Okay, because the bearish candle was so large of the surrounding price action, as you can see, it's one of the biggest candle I've seen in a long time for people who are trading Toronto Dominion. The market did not come back to 38.2. And what happened? Sorry, it did not come back to 50%. It came back to 38.2%. And this was also a resistance line. And then once that happened, there was this engulfing pattern that happened, and then right after that the market crashed. So this was another example where stocks, people who are interested in stock, they can take advantage of this as well. The next pair I'm looking at is a Ford Motor Company. Okay, it's a stock, and let's see how we could have taken advantage of this. Now, like I said, there was this big white bullish candle that breached the surrounding price action. And what happened after that? The market pushed down, and it pushed down to 50% off that candle. And then also there was a support line that was drawn at that location. And then what happened after that? Price moved back up. And now the signal, as I marked with this arc, you can see in the chart, is basically what? It's an inside bar. At the same time, you have a false break of the inside bar. Market comes down and pushes back up. It's basically a price action signal. It's called a Hikake pattern. And then market pushed so explosively higher, it's unbelievable. All right, so this is another extremely powerful signal that's happening in the market. This is actually a live chart. I don't know what's going to happen. I don't know what's the prediction for this market. As you can see, I have identified a resistance. I have identified 61.8%. And as you can see, there was a gap here. And that gap acted as a resistance. And then what happened after that is this consolidation happening. So there are a lot of signals. There is an engulfing pattern that's happening here. And then now, as of yesterday, which is 3rd of November, you have 3 black bearish bars, and the price is almost at the 50% of the last white bullish candle. So I don't know what's going to happen. There is a high possibility that market could fall from there. I'm not predicting anything, but this is a possibility. Like anyone who wants to take advantage of this, they can. Today is November 3rd, 2017. Anyways, guys, so this is how you can take advantage of this whole white candle. Now let's look at another chart of Coca-Cola. In Coca-Cola, this was another bearish candle that happened here, and we draw a resistance line as the last breach point where everything collapsed. And look how the market kind of pushed back down there, and then after that it formed this beautiful pin bar, top tails rejecting the market, and then market, as understood, it just moved down. All right, so there are examples of the failed, there are examples when the candles will fail, and we'll understand how these tall candles fail, and then what as a trader we can take precautions that understand how the price action is happening so that we don't lose the money. All right. So now when a tall candle does not hold importance, that's something which we have to understand. So when the tall candle low is breached, so when you see a tall candle, the price doesn't hold at 50%, 61.8%, and it comes down, it breaches the low of the candle, that tall candle does not hold any bullish or the bearish bias anymore. Low for a bullish candle and a high for a bearish candle. So when you see a low or a high is breached for a tall candle, either it's a bullish or a bearish candle, that candle does not hold any importance. The second is when a strong opposite signal is formed after initial good signal. So that means there was a good signal at 50% to go long or to go short, but right after that you have a strong opposite signal that indicates that market is not interested in going in that direction, but it's interested in breaching the tall candle. You want to exit the trade. Okay, so these are the two things we'll keep in mind. Let's look at some examples of how this would have unfolded. Now you can see there was a big tall bullish candle that happened right here. Okay, now what happened, and we identified our support and resistance level, and then right after that support line and the 50% off the candle, we saw there was an extremely powerful it's called piercing pattern that happened. But right the next day, okay, we had this strong bearish candle forming an opposite dark cloud pattern. So one day you have a bullish signal, next day you have a bearish signal. So what do? You exit, you come out of the market. Okay, that's what you got to do. Even though it looks like a powerful signal, you have a good bullish bias to go along, you exit, because right after you see this signal that it's dark cloud pattern, you want to exit the trade. So that's exactly what happened. After 3 days, market breached the low of the tall candle, and the tall candle does not hold any importance anymore. Now let's look at another example. This is Ford Motor Company. Okay, we identified this tall bullish candle, and we identified also a support line and a 50% of the tall bullish candle. But what happened after that? Market gapped down and it closed below the low of the candle. So when that happens, you know that, okay, the low is broken. We have a market that's gapping down. That tall candle does not hold any importance anymore. In fact, you can see the market went sideways after that. Market tried to push higher, but it could not push higher because no one was interested in buying beyond the tall white candle anymore. Okay, so these are the signals you got to pay attention to if you want to trade price action, and it'll show you how to keep an eye on price action. You cannot just simply blindly follow a strategy and go. You have to learn how to read the market. This is exactly what I do. This is what professionals do. This is what I teach for people who are interested in learning. And if you're interested in learning our course, if you're interested in learning anything about price action trading, please come and check us out at learnthepriceaction.com. The link is below the video. Once you click on the link, you will be taken to the website. It's a free subscription. I'm in the middle of launching my trading course. It's a very reasonably priced trading course that will be coming up. You can take advantage of that and learn these tricks, what professionals like Steve Neisen and other people are using in the industry. There are big books being written on it. So, and also across the Japan, Asia, people use this. Big hedge fund managers, all these people across the globe, they use only price action. You can use a lot of other strategies, but price action is the reading of the prices. If you do not know how to read the prices, computers cannot trade for you. You will lose money because computers are based on only few things. That is yes or no. You cannot program the human emotions and all the variables that's happening. You need to use your feeling. You need to use a system of reading the chart properly. And once you know how to read the chart properly, you will be the king in the market. So come check us out. And thanks for watching. I hope you liked the video, and you can subscribe to my channel below, and see you next time.